we've seen that European indexes have performed really well over the past year, despite many ongoing concerns. So, but we also see that many investors previously shunned the European market. So why is that so?
Yeah, thanks, Derek. And yes, finally, we have some outperformance from European equities after what has been a pretty bleak period for the asset class overall. And I guess if I were to put it down to just one thing, it would be regime change. You know, if we look back over the course of the last market cycle, it's really been dictated by only a few things, and that has been very low inflation or a deflationary environment, really low interest rates as a result. And in that type of world, it's the growth stocks of this world that tend to perform really quite nicely. And the value stocks that, if you went back all the way back to the 1930s, would show you that value tends to outperform over the long term, have had a pretty bleak period. So how does that extend towards European equities? So Europe, by its very construct, it's got fewer of those mega cap tech names that we've come to know so well, the FANGs of this world and the other AI beneficiaries that have been touted more recently. But what we do have is some very good stocks that are very lowly rated in the financials area, in the materials space, in the industrials area. And those value stocks, I think, all of a sudden become a lot more appealing in a world where the cost of capital is no longer zero, inflation is no longer at rock bottom, and interest rates are in a more normalized, or indeed, if you look back through time, a more normal environment for interest rates. So regime change is here. We think regime change and the extension of that leads towards market leadership change. And in that environment, I think value stocks do better against growth. And that's what investors have been saying to themselves, I think, since this time last year. And that's leading them to look at European equities for the first time in, I would say, over a decade.
Because it's cheap.
Because it's cheap and it's got some quality stocks, but it's going to benefit from that sort of overriding market environment that we find ourselves in. Yeah.
Especially when Europe is more value oriented, I would say, right? So just to sort of sum up what you've just said, because of this regime change, we've seen more and more investors coming in to Europe again. They're looking back into Europe because of the cheap valuation, and it's because of previously as well, we've seen Europe being plagued by more of, I would say, policy error, but not in this cycle, right?
Yeah, absolutely. And you bring up policy error, and that's very important. I mean, look at, after the last financial crisis, policy setters in Europe had a total disaster, is the truth. They were raising rates in 2011, had completely misread the inflation situation and soon had to reverse course. We didn't get to quantitative easing until 2015, almost 5 years after the United States had done it. I mean, come on guys, get your act together. Now, if you look at it this time, actually, within a few weeks of hearing of the first few cases of COVID-19 in Europe, we were already looking at stimulus packages coming in from European governments and European policy setters. So I think that policy error that dictated the sort of slowness of the recovery after the GFC, it actually looks very different this time with regards to what's happened.